Welcome in, everybody. It's another episode of The Inspired Show with Joe Cohen. I have an amazing guest today for you guys. The thing about real estate investing and the thing about entrepreneurship is you have to get creative. And the way that we get creative with moving our money around is we try and use other resources to be able to make our money grow, and then also use our money wisely to be able to invest. So today I'm bringing on another amazing co-host, and his name is Raymond McManus from CPS Life Insurance. He's one of my business partners in life insurance, and we've known each other now for...
Good amount of time.
7 years now, right?
I think so.
Yeah.
Approaching a decade.
Wow, that's amazing. So welcome to the show, Raymond.
Thank you.
Great to be here. Do you mind if I
Let's go Ray.
You go with Ray?
Yeah.
All right, good.
Keep it easy.
Welcome in, Ray.
Thank you.
So, Ray, you work with CPS Life Insurance. You've been a life insurance specialist for many, many years now. How many years have you been in the life insurance industry?
Well, let's see. Probably 15 years on the financial services side. And as you know, I was in the property casualty side probably for about 10 years.
Okay, great. Yeah. So, Ray, you and I met through my previous employer, Apollo Insurance Services. Shout out to Ken and Sherry.
Ken Potter,
man. That guy's amazing.
Right?
He's one of the most amazing mentors I've ever had.
Yeah.
So we met because you were a partner of Apollo Insurance because we were just a complete property and casualty insurance house. And so we needed to find ways to diversify while not actually having, an actual life insurance license or anything of that nature. So tell me a little bit about how that partnership came about.
Yeah, so, the property casualty space, these professionals, they're constantly working auto, home, or commercial insurance. Mm-hmm. And oftentimes they have needs, clients have needs for financial services, whether that's life, annuities, long-term care, disability income, right? And so we can come in and provide that expertise because it's typical that they don't have that expertise inside the office. Mm-hmm. And so we essentially just become an extension of their team, right? Handling those scenarios for their clients on a rev share basis.
That's amazing. Yeah. So what you're saying is that these property and casualty agencies who may not have a financial services division or the licensing for financial services, they can actually partner with you, and then you can bring them another stream of income.
Yeah, so absolutely. Yeah, they just don't have that expertise that we have within the office, and so we just bring it to them, handle their clients in the same way they would themselves, and it just makes for a great relationship.
That's fantastic, and that's the key too, is not having the ability to actually have somebody in-house that's selling or offering those solutions. Yeah. You bring it in, you collaborate, you partner up with somebody, and then they can do it. And really, it's kind of like a passive thing, right? We just send you the application, and you guys do the qualification, and then the agency will receive a check in the mail, right?
Yeah, it's a big time win for everybody. We're on their team, but not on their payroll. Mm-hmm. And it's not until something actually gets sold, right, that everybody enjoys, right, in the result of that, right, the financial reward for what we do.
Right. So why financial services, Ray?
Oh, great question. Yeah. So financial services, why financial services? It's a space that I enjoy dearly. I think it's much more relationship driven, much more conversation driven, because, we're solving for people's concerns, not just today, but well into the future. And we're talking not one decade, but potentially 2, 3, or 4, right, to mortality. Yeah. So we've got to really sort of look ahead and make sure the client, truly understands, what's around the corner as people progress, through the ages. Yeah. And so I really sort of enjoy that. And, I think my older self has seen a lot more. And so as a result of that, I'm a lot more educated, right, in terms of what's coming. Yeah. For any individual in any sort of time in their life. Yeah. So I think why financial services? I think that's the piece. Just really enjoy help educating and serving people.
That's amazing. That's actually a great way to have a mindset of, because I think there's way too many people just in my age bracket that just don't know about their options with retirement planning. Yeah. Right. For sure. we all think, oh, I own a home, I have a job, I can, you know, I'm got a 401k, and we're all set, right? But one of the things that resonated me early on in my career in insurance, working at a State Farm insurance company, I got my life, health, property and casualty, and they used to tell us all the time that, you know, people buy insurance because from a property and casualty perspective, because they have to have it.
Yeah.
Right. Yeah. But people buy life insurance because they're looking to protect their legacy.
Right.
Right.
Yeah, absolutely.
Because, you know, at the end of the day, there's only two things that are guaranteed in life: death and taxes. Right.
They're coming.
They're coming.
Here we are. Yeah, for sure.
So it's important for us to be able to plan for those times that we, you know, those unforeseen times, right? You know, perfect example. If you have a household with a husband and a wife, and let's just call it 2 kids, well, that husband makes a certain amount of income, and that wife makes a certain amount of income, and that's their household, you know, income, right? Correct. What happens if one of those people pass away? What's going to happen? Yeah. Right? Yeah. They're going to have all the same bills. They're going to have all the same, you know, activities that they want to do. And one of those people are going to be devastated for an indefinite period of time. Yeah. Right? Yeah. So what does that look like? Right? I think that, you know, most people don't think about that. If you're losing a 6-figure income for the rest of your life, how long is it going to take you to recoup from that? Right? Right? Yeah. That's kind of the way that we used to present it, is that, you know, you're going to have to take time off of work because you're not going to be in a mental state that's going to put you in a situation where you're going to be able to be functional, right? So that's an income loss again, right? Because you have to take family medical leave. You're getting only 60% of your income. So you're going to have to replace that other person's 6-figure income to help you put food on the table, help keep the lights on, right?
Yeah. All the while, you're trying to figure out the emotional needs of the family. You're dealing with stuff yourself as it relates to the loss of your spouse. You know, they say life insurance, people that buy life insurance is because they love somebody. I mean, I hate to get a little corny there, but I mean, that's just it, right? It underscores why life insurance exists. And, you know, to your point, you know, as a dad, right, I always thought, you know, geez, I'm going to own life insurance. I have full family, right? For me, it was like, well, first of all, I'm in the business, right? So there's all sorts of other reasons.
Got to practice what you preach.
Yeah, right. But it's like, you know, the advent of all these social media sites, right, where you can donate money. That name's escaping me right now. Right? GoFundMe, thank you. Right, so all these sites that exist now, and I always said to myself, you know, I'm not going to be the dad that if something happens to me, right, my family or my friends are putting up a GoFundMe.
That's powerful.
It's like I'm going to take care of it right now.
Yeah.
And so you buy life insurance.
Right.
Right. So this family's taken care of. You know, thank you for the GoFundMe page, but Raymond thought ahead and had this all planned out.
Yeah.
So. But yeah, it comes down to that. You know, people who buy life insurance, it's generally because they love somebody.
Amazing. Yeah, so there's different types of life insurance, and I think that most people are familiar with term life insurance because it's inexpensive. It serves the need, right? You can get large amounts of term life insurance for a low premium, right? So most people are kind of attracted to that for that very reason. Yeah. What are some of the other types of life insurance that you're familiar with?
Yeah. So term, as you said, is, you know, kind of the low-cost path, right, to purchasing life insurance. And everything kind of revolves around a budget. You know, we love somebody, and we have X amount of budget, right, to contribute to this need. And so life insurance, term life insurance, is the most affordable way to go. But other types of life insurance, to your point, you get into what's called permanent life insurance. And so we're talking guaranteed universal life insurance, or perhaps indexed universal life. Whole life is often, you know, people recognize whole life insurance. But this is life insurance to last your entire life, right, until the day you die.
Right.
Now, it generally costs more because the insurance company ultimately knows that benefit is going to pay out.
Right.
Right. That death benefit is going to pay out, and so they know that outcome is certain. and so they're going to charge more for it.
Got it.
Term life insurance, some pass and some, a few pass
And it expires.
most don't, and it expires.
Yeah.
Yeah. So yeah, two types, term and permanent.
Mm-hmm.
And by permanent, we mean guaranteed universal life or whole life.
Yeah.
These types of products.
Yeah, we in the industry phrase it term to perm.
There you go.
Right? Because you can actually take a term policy and move into a permanent policy if it qualifies, right? If you buy the right term policy. So for those of you out there who don't know about term life insurance, you can actually buy a policy with riders that will actually get you the ability to, after a certain period of time, turn it into a permanent life insurance policy.
That's a great point, right? It's a conversion privilege. And in a lot of these policies where we're now seeing technology, driving the sale, a lot of these policies, are kind of stripped down. They may not have a conversion privilege or as good of a privilege as you might get with another carrier. So yeah, definitely.
Sure, it's $25 for $250,000, but
right? Yeah.
What are you getting in that, right?
When you need to convert it, do I have conversion? Oh no, we don't have a conversion.
And it's really like, you're kind of betting on the time that you're going to die, right? I mean, there's 10-year plans, there's 20-year plans, there's 30-year plans, but with technology and medical advancements, people are living a lot longer. When I first got into the industry, the mortality rate was like 85, right? Yeah. Now it's like, is it 90 now?
It's high 80s.
High 80s?
Right, for sure. Yeah. But yeah, that conversion privilege is definitely something not to be overlooked. It's not until you sort of need it, death is certain. Maybe, life happens. And so people, we develop illnesses, whatever it may be, right? But in that moment.
Driving the most dangerous freeways in the country.
Yeah, right, just getting here. But yeah, you're right. It's so in that moment when you need it, you'll be thankful that you had it.
Right.
And so, yes, from an education standpoint, make sure your policy has a conversion privilege.
That's right. That's right. So you talked about permanent policies, right? So I personally have a whole life insurance plan for both my wife and I. And then a lot of people have the misconception that their company has them covered for life insurance. You want to really pay attention to what you're selecting in your employee benefits package because 9 times out of 10, it's just an accidental death and dismemberment policy. Right. And so we really try to educate our clients and our folks that, really pay attention to what type of plan it is. Yeah. Because there are, like a $50,000, guaranteed benefit, but it's tied to an accidental death. Yeah. Right.
Right. Yeah. Big difference there. And, we love employers that offer group life, right? Because it's the right thing to do from a benefit package. But yeah, outside of that, it's probably not sufficient. It's typically 10 grand, 15 grand, or maybe one-time salary. And so that coverage is awesome that you have it. But yeah, you always want to have something sort of on the outside that you own individually to cover that gap. You've probably got to go, let's say 50,000 with your group benefits, but you probably really need 500,000 or $1 million in coverage, especially here in California.
Yeah.
So you just do 10 times your income, and whatever you're making, if it's 100,000, that's $1 million, right? Over 10 years. Okay, you've got 2 kids, a mortgage, a cat, a dog, maybe whatever else is going on. There's a lot of spend that's going to happen, in the next 10, 20 years. Yeah. So you definitely want to make sure you have enough coverage to go the distance.
Yeah, absolutely. So keeping that same, thing in mind about, flexibility in your coverage, right? We talk about as entrepreneurs all the time of creative ways to use your money wisely, right? And as I stepped into this full-time entrepreneurial role over the last, it's already been, since May. Goodness gracious, it's May 2023 is when I took the exit. But, I had to really think hard because I used those benefits at the employer, right? Yeah. And I paid extra.
Started paying attention, huh?
I started paying attention. I paid extra for those extra benefits, right? Because I was able to get like $130,000, no physical, just because of the group plan, right? So that's a benefit. But now, being self-employed, being entrepreneur, I don't have those things. So I had to go out and start researching some different plans. Yeah. And one of the things that I was thinking about was, well, wait a second, I'm a real estate investor, and I actually earn profits that, I can, use that to fund a life insurance plan.
Yeah.
And then I stumbled upon the Index Universal Life Plan, which is another permanent policy, right?
Right.
Because I have a whole life plan, but I know that that's building cash value, but I want to keep that there, right? I want to keep that in place. I don't want to touch it. I don't want to mess with it because it eventually ends up paying for itself, and then the cash value just accumulates. Right. And then I could either, if I don't use the death benefit, hopefully, I can use it as retirement, right? So my mindset shifted, and I was like, well, wait a second. What if there's a way for me to find a policy that I can fund, have the death benefit, have all the benefits of the life insurance policy, but then move that money back into my account to use it for buying properties.
Yeah.
So that's where I came across the Indexed Universal Life Plan.
I can tell by the look on your face, you're super intrigued by it all, right?
Oh, I love it.
It's like,
yeah, it's like
exciting.
It's one of my favorite passions right now,
cool.
right?
Yeah.
So as a licensed life insurance agent, I approached Ray and I says, hey, Ray, I have this opportunity that you might be able to partner up with me on, right? Just the same way we would do at the.
Did I get just as excited as you did?
I think you did, yeah. Just the same way that you would partner with an insurance agency, you can partner with individual licensed agents, right?
Yeah.
Keyword, they must be licensed in order for you to sell a life insurance policy or talk about life insurance, right? So we started talking and we're like, yeah, Indexed Universal Life, it can fit because you can fund it, you can loan yourself money against the cash value in that policy, all while that money's still accumulating value. Let's talk about a little bit about that. So what's the most I can fund into an Indexed Universal Life insurance policy, and how can I use that money to invest in other transactions?
So, I'm going to come back a step. I love the fact that you've stepped off and you're doing what you're doing, what your passion is, right, in terms of real estate. And so some of the thoughts I had around you, was as you're building your empire, hey, we're talking about life insurance here, right? At the end of the day, we are talking about life insurance.
Yeah.
So we'll talk about some creative things here, but it's life insurance. So for you, as I thought about you, as you build your empire, and you have a life insurance policy, if for some reason in the middle of building your empire, you get stopped out, and you know that you're leveraging money in creative ways to do the things that you want to do, right? Because you know you're going to power this thing and you're going to make it happen.
Right.
Well, if God has an alternative plan at any given moment,
which He always does.
Yeah, right. And you pass away. Well, guess what? Guess what, honey, Stacy, right?
Yep.
I had a life insurance policy, and all of a sudden that death benefit comes to settle out, right, your path, right, to create the empire that you wanted to create.
Amazing.
Right?
She can sleep really good at night. She thinks I'm crazy with most of the stuff that I do.
Yeah, because all this stuff's going to be left for her there to manage.
Exactly.
And how great would it feel if a check came in at the same time for her to settle up everything and not have to do perhaps a fire sale on certain things or take counsel from others. Right? Here's the check.
Yeah.
I thought ahead.
That's amazing.
So anyways, So coming back to what you said as it relates to Index Universal Life, it's a fantastic tool. If you're looking to invest, some money into a policy, you can bring money into the policy and then access that money to, go after your various pursuits, whether it's investing in property or really for any purpose, right? That money can be accessed for any purpose.
So can I use it for crypto investing?
You can.
Oh, wow.
Yeah, I mean, once it comes into the policy, if you take a loan against that amount or a right?
A little risky to invest in crypto.
Well, hey, I mean, I'm not going to go. I was just going to leave that to you. I'm an insurance guy, right? But to your point, for any purpose, right?
Yeah.
If you called me and said, hey, what about crypto? I'd say, well, yes, for any purpose. But then we'd probably have another conversation altogether.
Yeah. Sure, you know what you're doing.
Yeah, right? Yeah, exactly, right? So yes, to your point, you can bring money into the policy. You can take money out of the policy. right? And just keep it funded all the while you're building your empire, right? Decade after decade. And once at the back end of the day, if you have a policy fully funded, well, then you can turn on a distribution stream to supplement your retirement.
Amazing.
So you've got all the real estate, right, income coming, whatever you've done there, and then you've got another lever, right, to pull in more money should you want to.
Right.
Yeah.
And that's down the line, right?
That's down the line, right?
Yeah. So if you hit 70 years old and you're, flying high with all your investments or whatever you're doing, and now you're like, well, hey, let me create another stream of income for myself.
Let me turn this on. Yeah.
Right. And now you're getting almost like an annuity where you're getting a monthly paycheck from your cash value or your life insurance while not impacting death benefit.
Right.
Right.
Yeah. It's all there. So it's a matter of, being disciplined. It's, knowing what you're putting in and what you're pulling out and how you're going to get that back in. Perhaps, right,
that's a great point.
You flipped a property or whatever it is, right? Cash comes in, so you're putting it back into the policy.
Yep.
And then waiting on that next opportunity. And when, it's there and you're ready to strike, you need some cash, well, then you're pulling out some cash out of the policy.
Yeah.
Right? But always bringing it back into the policy.
Right.
That's the disciplined piece.
That's the disciplined piece.
So that at the back end, right, when you are ready to retire, that you can then turn that policy on for supplemental retirement.
Yeah.
Yeah. It's your safe money.
Yes.
Yeah.
Yeah.
401ks, safe money. Right? Index universal life, safe money.
Yeah.
And it's over the long haul.
Yeah.
That is going to really pay off.
Yeah.
Yeah. So
that's amazing because, it also gives you an ability to control your money, right? Whereas I feel like, and this is just my personal opinion, 401k, you're kind of out of control, right? You're basing it on the investments that particular fund has aligned themselves with. Maybe it's, diversified, but it's locked in.
Yeah.
Yes, you could take loans against it, but you got to pay those loans back on a monthly payment, right?
limited.
They're limited.
What you can get out.
Yep, you can only take a certain amount out, right? Yeah. So you're really not in control of your own money.
Yeah.
You're just almost, funding a fund to keep the participating employer in guidelines with what they signed up for their company, right? Yeah. And so I personally have moved all of my money out of my 401k and put it into a self-directed 401k. Are you familiar with those?
I am familiar with self-directed, 401ks, but I'm not involved in those, quite honestly. And so
yeah. I just think that there's a false foundation when it comes to those 401k plans. So I took control back.
Yeah.
Right.
Yeah.
And now I'm using.
Well, you're building your empire.
I'm building my empire.
Right? So
yeah,
I think it's a matter of educating yourself, being patient with your decisions, testing. Your decisions.
Trial and error
before you put them into play, right? And then when you're ready to execute, sure, fine.
Yeah.
Right. But going self-directed without discipline and education and patience could, not be a winning formula.
Well said.
Yeah.
Well said, because you can get yourself into some serious trouble.
I mean, let's just keep it real, right?
Yeah.
So, yeah.
Yeah, you definitely got to do your research. You definitely got to know what you're getting yourself into, how to be able to manage the flow of that money and when it's coming out, how it's coming back in, things like that. So, what are there's so many different benefits from that Index Universal Life Plan. Back to that a little bit, but it's almost like you're the bank.
Yeah.
Right?
Yeah.
Because what do banks do when you deposit money? They go out and they lend it out.
Yeah.
And they charge interest on your money.
Right.
Right? And then they go out and they invest it and they earn interest on your money. Right? Yeah. And then that's how they offer their CD rates, or that's how they offer their loan rates and things of that nature based off of the money, based off of what they're investing your money in.
Yeah.
Right? Yeah. Whereas now, again, coming back to me taking control back, I invest my money into an Index Universal Life Plan where it's compounding interest daily, right? between anywhere between what, like 6 and
Yeah, so
8%?
yeah, growth is tied to an index, and there's no downside risk. So we say zero is your hero.
Okay.
In the sense that if the market went south, and negative 20% return of some sort, your losses are capped out at zero.
Perfect.
Right, so we say zero is your hero. It's a floor.
Right.
But for that, they're going to cap your upside, and it's typically around 10%.
Okay.
Right, so you get market-like returns with no downside risk.
That's amazing.
Yeah,
That's
market-like returns with no downside risk.
That's a winner.
Yeah.
Right.
It's a hybrid, right? The whole life is definitely much more conservative.
Sure.
Because it's much more strict and regiment in terms of what you can and cannot do, right? And there's very little flexibility within whole life. But index universal life does give you a tremendous amount of flexibility.
Yeah.
And it gives you, potentially more upside, potential. And hey, when you eke out, 1, 2, or 3% over a long period of time, it does start to add up to some real money.
Especially if you're a guy like me who's going to go out and take that money out as a loan. I'm going to lend it to myself, right?
Yeah.
At an interest rate that I set,
Yeah.
right?
Yeah.
And then I go invest it into another real asset, and then I take that, whatever, if I hold on to it long term, or if I, so a lot of the time what we do is the BRRRR strategy. Have you ever heard of that?
No, I haven't.
So it's buy, rehab, refinance. Oh, I'm sorry. Wait, scratch that. Buy, rehab, rent, refinance, repeat.
Okay. I
So
like it.
that way you can actually show that you're getting income from that property, refinance it, pull the cash back out, all the money that you got to get into the deal, and then you go do it again.
Yeah.
Right?
Yeah.
So technically I can give myself a loan for my index universal life plan, go buy that real asset, fix it up, rent it out, refinance, pull the cash back out, and put it back into my index universal life plan.
Yeah.
Right? And then all the while, I'm doing the repair and finding the right tenant. My cash is still accumulating in that plan.
Well, it's as if you never took the money out of the policy, because it's still recognized within the policy, growing at, whatever rate of return has been achieved. And so it's as if, you've got the policy here and the insurance, bank desk, if you will. So you need a loan.
Yep.
It's actually going to come from the insurance bank desk, not your insurance policy.
Right.
So all the while, it's as if your money is still in there, because it is.
Right.
And it's growing and growing, year after year.
Yeah.
But, to come full circle with the scenario you described, we've got to bring that money back in, settle up that loan, and then, again, be patient, do what you do, right, to find that next opportunity to execute on.
Yeah, exactly. Yeah. So when we use the term other people's money, I am an entity as an LLC, right? And so technically I'm lending my LLC that money.
Yeah.
So I'm using myself, but it's basically, the life insurance is money, right? It's other people's money. It's a creative way of financing a deal.
Yeah.
Right? And that's important. So especially in real estate investing, right? You have to be creative in the ways that you finance your deals. It can come from life insurance. It can come from you as one of my business partners. You see an opportunity to invest and receive returns on your money. Short period of time, completely passive. I'm not going to ask you to come and get your hands dirty unless you want to, right? Yeah. But that's another form of being creative with your money. And I think that that's super crucial in today's day and age, where people just don't have any idea what they can do to build their empire. Yeah. Right? Yeah. So that's kind of what we try to inspire people to do is just to know more, educate yourself. Right? Make sure that you are not just being narrow focused, tunnel visioned on just one thing. So then that way you can accumulate wealth. Right? Some of the richest people in the world are doing this very same thing, where they invest their earnings into these life insurance plans. Now, is there any limit to how many life insurance plans that you can have, or is there any limit to how big your life insurance policy can be?
Yeah, there are limits, in the sense that it's a financial, question, based on your income. Insurance companies don't want you worth more dead than you are alive. Imagine that, right? So,
I think my wife wants that.
nah, not just yet. Build the empire first.
There you go.
Yeah. And so, so there are financial, restrictions, but you can get ample, death benefit, right, to satisfy whatever pursuits you may want with respect to life insurance. Right. So I think we're okay there.
Okay. Yeah. All right. So what does that look like? I mean, is there there's a, what is it? You said 10 times your income? Is that
10, 20 times your income.
Okay.
Some companies will go higher than that. But they're just going to want to understand the need and make sure that they truly understand the financial need in your ask. Yeah.
Yeah, that's important because, you can't just go, drop millions of dollars into these things and expect, because it's not a way to tax shelter, right? You still have to pay taxes before it's going to be after tax money, right?
Yeah, you're paying premiums with after tax dollars.
Right, exactly. So it's not a way for you to, avoid the IRS, right? It's just a way for you to be more financially savvy and more financially well off, right?
You're putting your money in various buckets, if you will, right? That at some point you're going to turn on a spigot and it's going to power you, right, for the rest of your life.
What's the difference between universal life and variable life?
Variable, you're actually investing in, mutual funds or within the market. Index universal life, you're tracking an index like the S&P 500. You're not actually invested in the market, but you're tracking an index like the S&P 500.
Got it.
So, and then index, we said, gives you those borders, right? That protection, the floor and the cap, where variable, right, you can experience massive gains, but you can also experience massive losses.
Oh, yeah. So there's a lot of risk there.
There's definitely a lot of risk there. And from a risk standpoint, I don't want to go totally off track here, but I find it fascinating that banks will actually premium finance an index universal life policy.
Interesting.
And by that, what they're doing is, right, they're helping you fund the premiums for the policy.
Okay.
Right, but they'll do that on index universal life, but they won't do it on whole life.
Oh.
And they definitely won't do it on variable.
Yeah, because it's too volatile.
Yeah, because whole life is too conservative. So, when you work out the math, where are we 10 years from now? It doesn't pan out. Variable,
and it's slower growth rate too.
Yeah, that's exactly it.
Yeah.
Because at some point that loan has to be satisfied. And so, and variable, right, there's just too much risk.
Yeah.
You take some major losses and, right, the bank's sitting there with money that has to be
that they paid out,
that it's not there anymore.
Yeah, exactly.
So, from a risk reward standpoint, like index universal life sits right in the middle.
Premium finance companies can actually help you fund your index universal life plan.
Yeah.
So if you can only afford to put $25,000 in, but you want to be able to put more in, well, are they cutting it in half, or are they offsetting the $25,000? Obviously, you have to be able to afford to pay the premium back.
Yeah. There's
things
definitely
like that, right?
some qualifiers. It's really more for the affluent.
Yeah.
And they're looking for, a net worth of, let's just say 10, 20, 50 million.
Yeah.
Right, in net worth.
Yeah.
So it's definitely for the more affluent, purchaser of life insurance.
I'll be there soon.
Right? Build that empire, baby. That's right.
So, Ray, thank you for coming on today. I think this was a super valuable conversation. Yeah. That's why I put the chessboard out, because we're going to get smart today.
Yeah.
But I really do appreciate you coming on today. Is there anywhere that these people out there that are watching this show can find you, or they can reach out to you and talk more about the life insurance stuff?
Yeah, I think if we're obviously going to stay connected, we've got a long history together.
Yep.
I mean, have them just start through you.
Okay.
And through you, they can connect with me.
All right.
And we'll do some good.
Excellent.
Yeah.
Excellent. Well, thanks for coming on again.
Yeah.
I appreciate you.
Thank you. Enjoyed it.
And thanks everyone for watching. If you want to know more about index universal life insurance, whole life insurance, variable life insurance, or any insurance, You can reach me at Joe Cohen Inspires on Instagram, The Inspired Show on all of the platforms, YouTube, TikTok, Instagram. And if you are interested in knowing more, just DM me the word ultimate, because we're actually, coining the phrase ultimate banking, right?
That's right.
So
Yeah.
DM me the word ultimate, and I'll set you up with an appointment with my friend Ray over here, and we'll talk about your options.
Yeah.
Have a good day, everyone.